Ever wondered if day trading is just gambling with extra steps? Picture rolling dice every morning to decide if you'll make or lose thousands by dinner. That's the wild ride of day trading, and I'm gonna show you what it's really like. So, today we're breaking down day trading using a simple dice analogy to make it crystal clear. Whether you're curious about jumping into the stock market or just want to know why people risk it all, I'm gonna walk you through what day trading is, the big challenges it throws at you, and if you've got what it takes to survive it. Stick around, because by the end, you'll know if this is a game you even want to play. Let's start with the problem. Day trading sounds cool. Buy low, sell high, all in one day, right? But it's like walking into a casino where the odds keep changing. The market moves fast, and you're not just guessing what a stock will do. You're up against algorithms, big investors, and random news that can tank your trade in seconds. Most people lose money. Like 80% or more of day traders quit because they can't handle the stress or the losses. You've got to make split-second decisions with real cash on the line, and one bad move can wipe out your account. The challenge is, how do you stay sharp, manage risk, and not let emotions screw you over when the stakes are that high? Now, let's dive into what day trading is all about, using that dice idea. Think of the stock market as a giant table where you're rolling dice every day. Each die is a stock or crypto you're betting on, and every roll is a trade. When you day trade, you're buying and selling within hours, sometimes minutes, trying to catch small price jumps. Unlike long-term investing, where you hold stuff for years, day trading is about quick wins or quick losses. Imagine you've got a die with numbers representing a stock's price. You roll it, hoping it lands on a higher number by the end of the day. Sounds simple, but the market's dice are loaded with chaos. News about a company, economic reports, or even a random tweet can flip the outcome. Let's break it down further. To day trade, you need a strategy, like picking stocks with high volatility ones that move a lot in a day. You might use charts to spot patterns, like if a stock's price keeps bouncing between two numbers. That's your die, and you're betting it'll hit the high end of that range. But here's the catch. You're rolling dozens of dice at once, each affected by different stuff. Supply chain issues, interest rates, or even what's trending online. You've got to watch them all, decide which to bet on, and know when to cash out. Tools like trading apps help, showing you real-time data, but they can't predict everything. And you need serious discipline to not chase bad trades or panic when things dip. Here's where it gets tricky. Day trading isn't just about picking winners. It's about managing risk. Say you've got $10,000 to trade. You don't bet it all on one die, that's how you go broke. Pros use something called a risk-reward ratio. For every dollar you risk, you aim to make 2 or 3 back. So if you buy a stock at $10, you might set a stop loss at $9 to limit your loss to $1, but aim to sell at $12 or $13 for a bigger win. It's like rolling a die knowing you'll quit if it lands on 1, but you're aiming for 5 or 6. Sounds smart, but in real life, the market can fake you out, dipping just enough to hit your stop loss before shooting up. That's why you need a plan and the guts to stick to it. Now let's talk about the big moment, the make or break part of day trading. The climax is when you're in a trade, heart pounding, watching the price tick up and down. Picture this. You've bought 100 shares of a tech stock at $50, expecting it to hit $52 by noon. You're staring at your screen and it's climbing. 50, 50, $51. Suddenly, news drops about a lawsuit against the company. The stock tanks to $49 in seconds. Do you sell and take the loss or hold on, hoping it rebounds? This is where most traders crack. Emotions kick in: fear, greed, or straight-up panic. The ones who survive are the ones who've practiced their strategy, like rolling that die 1,000 times in a demo account, so they know when to walk away. That moment when you choose discipline over impulse decides if you're cut out for this. So, what's the deal with surviving day trading? It's not just luck or smarts, it's about preparation. You need to study the markets, practice with fake money first, and build a system. Start small, maybe with $500, not your life savings. Use apps with low fees, and never trade money you can't afford to lose. The dice analogy shows it's a game of probability, not certainty. You can tilt the odds with skills like reading charts or understanding news, but you'll never control every roll. Most importantly, you've got to keep your head cool when the market's screaming at you to do something stupid. To wrap it up, day trading is like rolling dice in a high-stakes game where you're betting on quick price moves. It's thrilling, but it's brutal. Most people don't make it because they can't handle the speed, stress, or losses. If you want to try it, treat it like learning to drive. Practice a ton, start slow, and don't crash your bank account. With the right mindset and tools, you might just beat the odds. Check the recommendation in the description below and subscribe to catch my next video on trading mistakes to avoid.